Hey traders, Dennis Wilburn, the AutoPilot Trader. Welcome to this special edition of Trade Your Way to Wealth and Financial Freedom. This is for the week of Thanksgiving 2022, looking towards the first week in December as we close out the month of November. I hope you had a fantastic Thanksgiving with your family and friends. Today's session, I'm going to be covering a couple of stocks that look pretty good. I'm going to provide also an in-depth look into each one of the indexes that we follow, our tracking indexes, the S&P, the NASDAQ, and the Russell. You'll be surprised at which one is the strongest. And then also, I'm going to cover a simple process you can follow to help you eliminate FOMO, eliminate spending too much time looking for stocks and ETFs, and how to simplify your routine on a weekly basis. You're not going to want to miss that. So let's jump into today's session right now. Traders, again, welcome to this special edition of Trade Your Way to Wealth and Financial Freedom for Thanksgiving 2022. I hope you've had a lot of plenty of turkey ham or whatever you want to choose to celebrate Thanksgiving with, and plenty of college football. I know that I got my fill in college football, plus my Texas Longhorns beat Baylor. Now we're just waiting to see if Kansas can beat Kansas State so we get into the playoff and get into the championship game for the Big 12. We'll see about that later, a little bit later today. So before we jump on to the rest of our discussion, I want to remind you that if you're just joining us on YouTube channel, please subscribe and suggest, recommend, like what we're doing. Help feed the algorithm so that more people can hear about autopilot trading and the free stuff that I do on the YouTube channel, Market Tech Talk. I try to keep that up to date with good technical tips on how to trade, and I think today's session will be no different. So here's where we're sat. Here's where we sat at the end of yesterday, which was a shortened trading session. As you can see, week before last, we were here, and we had a slight uptick in improvement. Mainly, big improvement on the Dow, about a percentage of improvement on the S&P, NASDAQ, and the Russell. I had basically a couple of stocks that we were able to get in on active trend trading, actually turned against us, but we're still up almost 34%, or a little bit over 34%. My target, again, remember, I shoot for 40% on a yearly basis. We're still beating the S&P by 50%. I look for the next 5 weeks of trading to basically be continue to build up, and I want to make sure that I do take the steps to assure that we meet the 40% for the year. With that said, let's go ahead and jump over to the indexes. A specialty that I'm going to do for you today is I'm going to cover all three indexes. They are all three showing a separate in individual characteristics, but we'll take a look at the S&P, the Qs, or the NASDAQ, and the Russell, and you'll be surprised when you find out which of these entities actually is looking to be the strongest one right now. The other thing you want to be keeping a look at as we move into the end of the year or into the end of the month, which ends this coming Wednesday, is take a look at those monthly charts. The monthly charts can give you an idea of what's turning around, and you may be really surprised. Take a look at the S&P, the Dow, the NASDAQ, and the Russell. There's some interesting characteristics on what's basing, and I'm looking for possibly some strong moves to the upside. I'm shocked myself when I'm saying that. Strong moves to the upside on, well, you'll see that here shortly. So here we are with the S&P, the spiders. What's going on here? We've got a downtrend line, as you can see. We've got the downtrend line, as you can see here. We have the 200-day moving average here. We've got price action hanging out just below that. What did we get from this past week? Well, we came down on Monday, triggered off of the 8, and then proceeded to move on up. Didn't get up to the 200-day moving average, but look at the low volume. Low volume was fairly low. It has been heading down in the down direction since it had this big spike up, and that spike up corresponded to that move right there. How do I want to trade this? Do I have any reversal signals on either side? And the answer to that is no, I do not. I will look. I can anticipate that we may get a reaction as we approach the 200-day moving average or the downtrend line. Now, what would that reaction be? I would anticipate the resistance formed by that zone we could stall out and then pull back. The positive side of the what's going on with the spiders is that we are moving to the upside. All of the other moving averages, with the exception of the 200-day moving average, are all swinging back up to the upside, and we just about have it where. Oh, where's my 200-day moving average? I think it's this one down here. As we can see, it is starting to move back up to the upside, and we're getting a crossover, the 20 above the 100-day moving average. However, that 200-day moving average, until that's broken, until we break and run through that and close above it, that still indicates that, hey, we're still in a downtrend. And as long as this other downtrend line is still in effect, we're still in a downtrend, folks. So that's two of the things it could do. One, push all the way up there, stall, pull back. But watch for it to pull back where? Back into the moving averages. I would draw a trend line along these lows here. And that's kind of our line in the sand. That would be a good place if we did, in fact, get a run up, pull back. Hitting somewhere off of that uptrend line would be an excellent area to plan a trade. I would wait till I hit it and then do a rebound, given the market conditions that we're currently in. So as you can see, S&P, looking pretty strong. Moving averages all stacked in the right direction. Break above the 200 and this downtrend line. That could be the first indication that the S&P is going to go stronger into a big uptrend. Now, on the NASDAQ looks weaker, as you can see here. We're just slightly above the 8, the 20, and the 50, and the 34. We're still below the 100. We're still below the 200, and price actions moved all the way up to a 50% retracement on the Fibonacci, and then stalled out. That's what happened over here. And we got the trigger this week. Not really a great pattern, but as you can see, longer term on the weekly, the momentum has shifted. So just keep that in mind. But we still need a breakout back above that. And if we do get the breakout, where would I look at it potentially stalling out at? Well, you got it. Up here at the 200-day moving average and the downtrend line. So of the two indexes, I think the NASDAQ is weaker than the S&P. Now here's the take a look at the Russell. The Russell is very interesting, as we used to say that. I don't remember. I don't recall. But as you see, the Russell, as represented by IWM, has also continued to push on up. It closed above the 200-day moving average and then came back down and retested at the 20. And this past week's effort went from the 20 on up, tried to break out above the 200-day moving average, and didn't quite get the job done on Friday. We'll see what transpires next week. On the weekly chart, it looks like we want to blow on up and through the 188 level, and so I would be putting a alert in about the 188 to 188.20 level, and if that's busted and breaks out of that, then we're probably going to go ahead and take out that high there at 189, and we could be off to the races on the Russell. And I like this. I like the potential of what this, what this has to offer. Again, one of the things on a holiday weekend, or holiday week, excuse me, that is something you always want to be look at it. We don't want to put too much of an analysis, analysis meaning on the week that is a holiday week, because we know that it typically has a bullish bias. Secondly, volume's typically down because the institutions are out of town, not trading and all that kind of stuff. However, I'm still looking at this longer term. This is just doing a nice little uptrend, Mark, and over the, starting back here in October. And so let's see if we can break out. It may just totally crap out right here at this downtrend line. And we'll see if they bleep that out when they're doing the edit on that. And so let's see. So that's what we've got going on the Russell. One of the things I'll just share with you really quick, and I said I wanted to go into just a little bit more depth on what's happening with the Russell, and that's to take a look at. Just what I want to take a look at. Yeah, there we go. Is, as you can see with the Russell, take a look at what's happening over here on the monthly chart. This is really impressive. We've got a major momentum shift taking place on the monthly chart of the Russell. That's saying, hey, I'm getting ready to bust out of here and move back up. Who knows? It may move back up to the 237 level. And you can take that down the line, look at the leveraged ETFs on this, but the MACD, the market forecast, and the monthly TSI all looking very positive to the upside. Take a look at the Qs. What's that doing? Similar type situation. Now we've got these long hammer type with long wicks on the bottom. Those are very positive. And so what does that tell us? I like, I pull back on the Qs back into the 281 level. That's where a safe potential entry could, not safe, but low risk, high probability entry. And also here on the spiders, what's going on here? MACD is starting to turn around, market forecast starting to turn around, and the TSI is just shifting to the upside on the monthly chart. So we'll see how that, it's got 3 days to finish the month. I am not making any prediction until we actually get the monthly done. But with a couple of days, 3 days, a couple of days left in the month, it's not a bad time to start taking a look at what, the monthly candlestick may look like. And you can do that for both the indexes and the indexes and also the individual stocks that you may be looking at or the other ETFs that you may be trading. So that's what we've got with that. I want to go back really quick again, and I want to show you. So here's our tip for today. Would you be a better trader if you could? This is the question. 1, avoid FOMO, fear of missing out. Fear of missing out is a really thing that impacts a lot of people. One of my favorite stories on the fear of missing out was I was coaching a psychologist in trading, and she kept telling me that I keep missing these trades. I keep missing the trades. And I said, well, why do you think you're missing the trade? Because she goes, I'm afraid to take action, because I'm afraid if I take action, it will mess up, or I may be choosing the wrong stock. And so I provided her a solution, but she said, when I provided her the solution, she goes, but I'm still afraid I might miss something. And so she couldn't deal with her own fear. So told her that she needed some psychological help, but that's another story. If you could, stop wasting time searching for top stocks and ETFs. That's another thing and reduce the variables of too many stocks or ETFs. And so the solution is very simple. One, learn to focus on a few. It reminded me of my good buddy Dougie Olson, who for years used to trade one simple stock. He would trade options on Apple. Did extremely well with that and was very pleased in doing that. And there's this untruth out there in trading, especially if you're just getting started, but it also goes into people who've been trading for a long time. You think you have to trade a bunch of, or follow hundreds and hundreds and hundreds of stock. That is unadulterated BS. You do not have to do that to be successful. You can trade leverage ETFs, or you can also look at what we do with AutoPilot trading. I have a solution for that. It's called the Power Rank Elite Watch List. And I'll lay a link in it and I give this away free. This particular list, every week I give away free. If you're interested in get it, leave a comment in the comment section on the YouTube channel, or just drop me an email, or I'll leave a link, and you just basically just opt into my mailing list, and you get this every week. You get it every week. And what it is, it's typically the top 20 stocks that I find every Friday, Saturday, and Sunday from the previous week. And I update it on a weekly basis. And as you can see, it's got great stocks on it, and it's a vetted list. And so if you're spending hours looking for a good list, stop it. Become an AutoPilot trader and check this out here. So what about the stocks that we're going to be looking at this week? Well, I'm looking at a couple of them here, guys. One, FLNG. I really like this to the upside. But it has basically just broken out, which is excellent. So I'm looking for a pullback towards this line right here. This is my breakout line. So if I drop in, so if we actually get down, if I can get down to 3564, 3570, I would put an alert on it dropping 3621, and I'm looking for it to basically pull back into the breakout zone and then bounce higher from there. Really like this particular stock. It's got some good potential to the upside. As you can see, above average volume on this buy, and it is showing a lot of really good flags back down to support, flag back down to support, looking for another flag back down to support. When a stock tends to show that type of characteristic or personality, and it tends to continue that for some times. And when it stops doing that, that's when you suddenly say, oh, okay, something's amiss here. So I want to get out of that. So what's the other one? Well, this is one that I'm going to just throw out there. I think it's got some potential. It's starting to get some attention again, and that's Netflix. Now, I'm not a big Netflix fan, just simply because I don't, I basically don't like their subscription policies and all that kind of stuff. However, the chart is looking pretty good. It's back above its 200-day moving average. It is doing a pullback into a really nice hammer here on Tuesday of this past week. And we look like we're going to start a breakout, but it gave us a little bit of a fake out. So we may pull back into the 280 level, 278 level, or even at the 200-day moving, the 20-day moving average, which is about the 282. So a couple of ways to trade that is you can just basically draw a trend line here. And we break above that line there, or close back above the 8-day moving average. That would give you an opportunity to trade Netflix, and it has really great options. And look for at least a move back up to this level here. And if it gets back to the past highs, it could go higher than that, but just give us an idea there. It's about a $20 gain. And hold on just a second, please. And you see, if this pops here and moves on up, it could go as high as, and here's the way you figure that. Let's do a real quick Fibonacci extension off of this. Go bang, bang, bang. 337. 337 is the upside, one of the upside targets. That would be a 100% move, symmetric move with this move from there to there. Okay, that's what we've got for today. We've given you some good tips, and we are now ready to jump on over to, hey, do you struggle with spending over 2 hours per week finding strong trading setups? Well, I used to search for hours, and I'd still be unsure of my trade setups. And that's one of the reasons why I put together and I built the active trend trading and the AutoPilot trading system. So, hey, come and check us out. Become an AutoPilot trader. Take a test flight for 3 months. There's the link there, and the link will also be in the description on the YouTube channel. So with that, I'll just say, hey, switch on the AutoPilot. It'll help you trade better. So with that, 2022 has definitely been, we put this up here at the very beginning of 2022. That was my consideration and thoughts for what 2022 was going to be like. Patience and persistence and consistency. And it has definitely been a year where we've had to practice a lot of patience, and we've had to be persistent and kept going for it. And it's been a kind of a sloppy trading year, but we're still beating the heck out of the S&P, and we're approaching my goal for the year of 40%. So again, I hope you had an absolutely fantastic Thanksgiving, and I look forward to being live with you next Friday as we move on to the last few weeks of 2022, and looking forward to even greater things happening in 2023. And so, hey, there's the rest of what we do. And I am going to throw up a video that's basically how to find the best growth stocks out of the 6,000 stocks every weekend. And I show you my process for how I find the stocks. So if that's of interest to you, let me know, and I'll leave a link for that. It'll show up right here as a video to watch. So until next week, aloha. God bless everybody. Have a fantastic rest of your Thanksgiving weekend. See ya.